Welcome to Anderson Investing. I'm Jeff Anderson here with my 15-cent hot coffee. Today we're talking about the recent merger between Tilray and Aphria, forming the world's largest cannabis company. On May 21st, Tilray shares closed at $15.23. Looking at the chart here, I remember from about a year ago when I bought several shares at around the $7-8 range, lowering my average cost back when it was way cheaper than it is now. On March 15th this year, Tilray had been at $30.47 a share. Tilray and Aphria both had been going up after news of their merger. I saw my shares of both companies increasing in value, and I was at over $100 or so profit of each. And we see it had been going down. People have been taking profit, and it's been coming down to a good price to buy more shares of, so it made me quite happy. As with any big news, including mergers, investors and traders will usually sell the news, and we can see that the price kept dropping after the merger. For the time being, as analysts are pointing out, the company is overvalued, so that's part of the reason why the price has been dropping. But that has a lot to do with the pandemic, and just because investors pumping up the price of the stock previously, but over time, in the long run, this will be a great company to invest in and have some great growth over several years. As analysts have pointed out, the company is overvalued, which is primarily why the price has been dropping. Some of that was due to the pandemic, but also because of investors pumping the stock up with the initial news of the merger coming up. So the company being overvalued means the stock could drop a little bit more. But that doesn't mean that there won't be future growth in the stock in the coming several years or so. Tilray's market cap is at 6.7, almost 6.8 billion. EPS is at negative 1.67. Looking at their income statement on Yahoo Finance, they're showing a total revenue of $611,000 and a cost of revenue of $418,212. which brings them to a gross profit of $192,850. Operating expense $250,366. Operating income is negative $57,000. On their balance sheet, they're showing total assets of $2.4 million, almost $2.5 million. Total capitalization is $2.2 million. The Motley Fool points out that their annual pro forma revenue when they announced the deal in December 2020 totaled 874 million Canadian dollars, which is 73% higher than the $506 million that the industry giant Canopy Growth generated over its last 4 quarters. CEO Irwin Simon said that the international cannabis market didn't represent a huge segment of the old Tilray's business. International medical marijuana sales last year totaled $33.9 million and accounted for 16% of its gross revenue. Aphria, however, was more dependent on sales outside of Canada for its growth. Its CC Pharma subsidiary in Germany drives nearly all of the company's distribution revenue. In the 6-month period ending February 28th, distribution revenue totaled 178.8 million Canadian dollars. That's 57% of the 314.2 million in net revenue it generated over that time frame. Reading an article on investors.com, they point out that along with their recreational businesses in Canada, the merger gives the combined company the old Tilray's medical business in Europe and Australia, as well as its debt. And it also folds in Aphria's distribution business, which rather than cannabis, had driven a majority of Aphria's sales. The deal also brings together a handful of U.S. businesses: Manitoba Harvest, a company owned by the old Tilray that sells hemp granola and CBD products, and Sweetwater, a leading cannabis lifestyle branded craft brewer. Tilray's $6.7 billion market cap is currently trailing Canopy Growth's $8.6 billion market cap. Their EPS rating is at a 30, with 99 being the best possible. Other marijuana stocks also have not great profit ratings, and the EPS rating is a gauge of the company's profit growth. Aphria reported last month disappointing quarterly results, which it attributed to coronavirus lockdowns in Canada. But Tilray in February reported fourth quarter results that beat some expectations. Analysts expect Tilray to lose some money this year and next year. That being the case, there shouldn't be any harm in buying some relatively small number of shares so that you can hold it long term. And don't panic sell when some of that money looks negative. Or if you'd rather, you might not buy any right now and wait till it seems like things are recovering and after the stock has dropped down a few dollars more or so in share price. Reading more points from Tilray's website, they talk about how they're the world's largest global cannabis company. The combination of Aphria and Tilray brings together two highly complementary businesses to create the leading cannabis-focused CPG company with the largest global geographic footprint in the industry. They believe that the company has the strategic footprint and operational scale necessary to compete more effectively in today's consolidating cannabis market with a strong, flexible balance sheet, strong cash balance, and access to capital. And they believe that they'll give the company the ability to accelerate growth and deliver long-term sustainable value for stockholders. Tilray is well positioned to pursue international growth opportunities with its strong medical cannabis brands, distribution network in Germany, and end-to-end European Union good manufacturing practices supply chain, which includes its production facilities in Portugal and Germany. Yahoo Finance has them under the healthcare sector, which is largely true, and that shows them having 1,200 full-time employees. And I don't know if that includes Sweetwater's employees. I would kind of expect not, whatever number of employees Sweetwater has. As always, I am not a financial advisor. This video is strictly for entertainment purposes only. Personally, I think that Tilray is possibly the best cannabis company to invest in for the long term. Most likely, I will not sell my shares of Tilray for 10 years or more, maybe a lot more. I do own some shares of a couple other cannabis or marijuana companies such as Canopy Growth and Clever Leaves, which I also plan on doing some videos about in sometime in the future. In addition to individual marijuana stocks, I also own some marijuana or cannabis ETFs. They pay dividends, so you can earn some money while you wait for years for those stocks and ETFs to grow. And since those ETFs are diversified amongst multiple cannabis companies, you don't have to rely on just one company to grow. If you enjoyed this video, don't forget to hit the thumbs up button. Subscribe if you haven't already. Thank you so much for watching, and I hope you all have great games.